Now in the studio is Nicola Marinelli, who is fund manager at Glendavan King Asset Management. He sold his Italian bonds back in July. Good move.
Yes,
Why did you sell them?
I sold them because at the point there was the agreement between Merkel and Sarkozy for Greece, and it was above the expectations, and I thought it would put markets on a better mood. But after a few days, the price of Italian government bond plunged again, and after supposedly good news, that is not a very good market reaction.
The difficulty with the market reaction at the moment is that the bond yield now being over 7% for the 10-year, it becomes at a point where people start thinking, well, they can't afford to pay that in Italy, therefore they're going to default, and therefore the situation gets worse. You then see the bond yield go up, it's self-fulfilling prophecy, isn't it?
Yeah, exactly. Italy was a borderline country in a grey area where it was basically solvent until the market had confidence it could solve its problem, it could fix the structural needs it has on the public sector, it could put the budget surplus in.
But can it do that now? Is there still hope to get that yield back down?
Now it's much more difficult. If yields stay at this level, these self-fulfilling expectations, they are very difficult to break once they kick in.
Let me ask you about the euro itself. It has always been said that there is a mechanism for a country to leave and that it would be catastrophic for the eurozone economy if a country did leave. Are we now in such a state of chaos it would be better if the likes of Greece and Italy left?
Well, I'm not sure it will be better, but it easily is no longer avoidable. It's something that is very much probable, and it will be a major disaster, or there will be major knock-on effects on banks and companies and savers and so on. But I'm not sure that something can be done now.
Why, very briefly, would it have such a detrimental effect on the eurozone economy? Is it because the banks being so badly affected?
For example, yes. We've just seen that a lot of MF Global, for example, went into bankruptcy due to the holdings of Italian debt, or because the other European countries' debt. There were problems with some other brokers and banks who were very keen to announce that they had sold their positions in Italian government bonds and Spanish government bonds and so on, because the market was not really satisfied with these banks having all this risk on their balance sheet. And so, yes, that is definitely a link for problems to come.
Yeah. Thank you very much indeed for joining us.